Hello everyone, and welcome to the specialist trading presentation of our dynamic duo. This is a great combination of two of our most consistent methods that we've put together that really increase your odds for success, and we call it the dynamic duo because it is so dynamic. As well, I'm going to show you how to implement these methods together, and I will give you the rules to two rules actually to a part of the strategy that is included in this dynamic duo. Now, welcome. Thank you once again for taking time out of your Thursday afternoon. This is Primo. I am the president and founder of Specialist Trading. And as you'll see in the next hour, if you've attended my presentations, we are an educational company. We are more about teaching you how to trade than actually trading for you. It's our opinion that most traders fail, upwards of 80%, because you're basically giving your power away. You're relying on someone or something to tell you what to do, how to trade, what market to trade, when to get in, when to get out. We really feel the opposite. We feel that you can make your own trading decisions provided you have the proper education and sound fundamental techniques and strategies, and this is what we provide you with. But ultimately, you'll be making your own decisions off this. The reason why I say this is because I went through the same thing in my own trading. I've been trading for 38 years. I started on the floor of the Pacific Stock Exchange, where I was a trader for 16 years on the floor, and 9 of those years I was a specialist. I traded through the crash of 1987 and the bull market that followed afterwards. I've seen and heard and traded myself just about every technique imaginable, so I know what works and what doesn't. I know what can get you on that road to consistency, and I know what will actually lead you to failure. So that's why we're more about educating you these things rather than just simply force-feeding you signals to take on a daily basis. Now, before we begin with the presentation on the dynamic duo, let me just show you our disclaimer here. We're required to show you this. And please remember that I'm going to show you a lot of performance today with our daily duo, but please remember that we can in no way guarantee that any of the results I'm about to share with you will be repeated in the future. So as you're taking a moment to view our disclaimer, I would also like to invite each and every one of you to follow us on Twitter. This is our handle right here, abbreviation for Specialist Trading, at SPCLSTTRADG. I post a lot of great free information on a daily basis, anywhere from financial wisdom to actual signals that we're currently in. So there's a lot of great free information. Feel free to follow us on Twitter. Now, something new I also want to mention and alert all of you to, there is going to be a great get-together, a great boot camp, and this is coming in May. As you can see here, this is put on by Trading Wins. It's a 2-day boot camp, and it's 2 full days of education. This is May 11th and 12th. 7 trading expert speakers, and they're going to be covering topics such as stocks, options, futures, forex, taxes. There's a lunch and cocktail reception, panel discussion, and this will all be held in the MGM Grand Hotel in Las Vegas. Once again in May, just a month or so from now, and I'm happy to report that I have been asked to speak. I'm one of the 7 speakers, so we're going to cover a lot of topics, a lot of great information, and I'm inviting each of you and every one of you to come see us and come see myself. It would be great to meet you if you're going to be available that weekend. And for more information, you see there's the link posted below at the very bottom of the page. Now, it's not a live link, so you can just copy and paste that and go to your paste that onto your browser, and you'll be able to get all the information. But once again, this is put on by Trading Wins. They asked me to speak along with 6 other trading experts, and so I'm going to be speaking there as well. So I'd love to meet you, love to see you there. This will be in Las Vegas at the MGM Grand Hotel for the weekend of May 11th and 12th. All right, so let's begin. And remember, my goal is to teach you how to trade with the Specialist Edge. We're not about force-feeding you signals and having you blindly take them. Remember, I said at the very beginning of this presentation, it's our belief that the reason why most traders fail is because you're relying on someone or something else to tell you what to do. I mean, I know this firsthand because this is the way I used to trade. So we want to put the power back in your hands. We provide all of our students and members with sound fundamental education and sound techniques and strategies, and you can pick and choose what you want to trade. Now, one of the best things we have is what we call our dynamic duo. So this is what I'm going to be sharing with you today. I'm revealing some of the rules to the actual strategy. So it's 2 methods. Let's go over method number 1 first. Now, before we go into it, if you're new to my presentations, you'll know that I love to take your questions, but I like to take them at the very end. So if you have any questions in the next 20 minutes or so, as long as this presentation is, kindly wait off till the very end of the presentation, and I promise we'll answer them at that point. The one question I will answer is that this is being recorded. That's our most popular question, so I get that out of the way right off the bat. All of our presentations are recorded. So if you have to leave early, if you're having technical difficulties, you can contact Pro Trader Strategies, and they will set you up with a link. All right, so let's begin, and let's start off with method number 1 of our dynamic duo, and that is simply one of the best methods we have, which is the PET-D. So if you're not familiar with the PET-D, I've spoken about it many times, and we have students who have just fallen in love with this. It's turned their trading around. What is the PET-D, you're asking? Well, it's a proprietary algorithm, an algorithm I was introduced to on the floor of the stock exchange some 30 years ago. Now, at the time, we had to calculate it by hand because it was, we didn't have high-speed computers or programmers. But now we've put it in with the help of some programmers. We put it in the form of a color bar algorithm. So what it does is identifies short-term trends, and it's really fine-tuned to help you be in sync. Many times, as I'll show you in a few minutes, it will tell you the trend before a major move happens. Even it will tell you the trend before a news announcement happens. And that's how fine-tuned it is. And as I stated, it's a color bar algorithm. So all it does, the add-on that we supply all of our members with, it changes the colors of the bar to tell you if we're in an uptrend or if we're in a short-term downtrend. This is what it looks like. If you have a series of green bars, and this is an ideal situation because sometimes you'll have a splash of red here and there, but if the majority of bars are green, such as you see here, well, then the short-term trend is up. And if you have a majority of red bars, series of red bars, the short-term trend is down. It's that simple. It's that simple to know what direction the short-term trend is going. So let's look at this example of HRB right here. Now, obviously, if we look in hindsight, we see that this was going up. This was going up up until the middle of February. The stock was in a nice uptrend, but then it changed and went lower. Now, what most people do is once they finally decide that we're in a full-fledged uptrend or someone gives them a signal in some trading room or a chat room, they buy somewhere around here, and then when it doesn't do much and then it starts really turning to a large loss, well, this is where they sell, right around here, because most people are out of sync with the trend and they're relying on, once again, someone or something to tell them what to do. Either this is someone in a trading room or some system or some technique that someone is telling about on TV. Now, if we simply apply the PET-D, remember, green means an uptrend, red means a downtrend. Well, we would have known in advance that well before we had reached those heights of this nice move, we were already coloring the bars green. So it was telling you that you are already in an uptrend all the way down here. And now, you could have stayed long in your position or looked for buy setups until this point when you started to see red bars. That was your clue that the trend was ending according to the PET-D. And then look what happened. So it's a great, early warning technique to tell you when the trend may be changing as well. Now we can also apply this to weekly bars. It just doesn't work on stocks, or it just doesn't work on daily bars. Weekly bars of the E-mini S&P. Now looking back in hindsight, going back 2 years ago to 2013, we see that on a weekly basis the E-mini has been going pretty much straight up. But if we look back and apply the PET-D, we see as far back as 2012, the majority of the bars were green. As you can see, every once in a while there's a red bar, but we need to see roughly 3 or so bars of a different color in order to tell us that we are changing the trend. Now, this is mainly a current chart all the way up here, and as we can see, the bars continue to remain green. So if we're trading on a long-term basis, the market, or holding on to positions as an investor, we're not going to exit until we have 3 consecutive red bars. Now here's another example on the British pound. Here's a 4-hour chart of the British pound. Obviously, looking back in hindsight, we're in a downtrend here on this 4-hour chart. But if we apply the PET-D, we see that the bars were initially green, and then right here they turned to red. So once again, the rule of thumb is once you see 3 bars of a different color, that's signaling that the trend is most likely changing. So you could have exited your position if you're along the British pound, or once you had 3 bars here, if you wanted to trade conservatively, then you could have started looking for shorting opportunities. Now we can also apply this to indexes. What a great tool to know that you're in sync with the index. Here is a monthly chart of the S&P 500 index going back 20 years, back to 1995. And we see all the peaks and valleys when the market went straight up until we got to the dot-com bubble burst, and then went straight down. Then we started to firm up again in 2004, and we went straight up again to reach the old highs until we had the banking and financial crisis in 2008. We crashed again, and then since 2009 or 10, we've been going straight up. So as an investor, someone who has an IRA, you'd want to know when to be in the markets long term and when to be out when these crashes occur. Well, all you have to do is apply the PET-D. Look at how the PET-D was remaining green the entire time up. Sure, we had maybe one red bar here, but it continued until we had 3 consecutive red bars telling you to get out in 2000. And you would have missed all of this sell-off. You could have gotten back in your long-term portfolio in 2003, ridden all the way up to the new highs until 2007. Not 2008, but 2007 when we had 3 consecutive red bars, and you would have bypassed all this crash here with the banking crisis. And then lastly, you could have gotten in around 2009, the latter part of 2009 with 3 green bars here, and you will continue to remain long on a monthly basis. So you see how fine-tuned this tool is. Now, let's look and see how it works with news. Remember, so many people make their trading decisions based off news. I have so many new students who say, well, Steve, I want to wait till the news comes out because I've been taught that I really can't make a decision until some earnings report comes out or some jobless claim or what's going on economically around the world. I don't trust the markets. Well, if you feel you must trade that way, there's nothing wrong with that. We just do not in any way suggest that our traders need to look at news. I haven't looked at news in the past 30 years. But let's see how it would have applied. Now, this is an older chart, Open Table. Since then, Open Table has been bought out. But looking at that in advance, say you were interested in this, say there were rumors of it getting bought out, and you're looking at this chart in June of last year, and you're thinking, well, there's really nothing happening. It's going sideways. So I'll wait for a news announcement or a little bit more volume or something to tell me that this is going up. And lo and behold, look what happened. The stock gaps up, and you would have missed everything because it got bought out by Priceline, I believe. All right. Now, had you been waiting for the news announcement, well, it was too late. The stock already got bought out and already gapped up at those high prices. But if we applied the PET-D, we see that the PET-D was initially in a downtrend, as you see here, but the bars turned green. In fact, 3 consecutive bars turned green way back here in May. So you had an actual uptrend signal that was given by the PET-D 3 weeks before the buyout announcement. So you could have looked for ways in which to go long, could have done some research knowing you were in an uptrend. And I can see here that there are a number of buy opportunities that we could have applied using our strategies. How about something recently, last couple of months, just a month or so ago in Amazon? Same scenario applies. Let's say you were interested in the stock, but you needed more information. You were waiting for an announcement. You don't really have much information to go off by. But on the 29th, you see right here, a news announcement came out and the stock gapped up and continued to go higher and higher. By this time, you feel, well, I've missed it. I'm not going to get involved. Well, if you had the PET-D, you would have seen here that the PET-D gave an uptrend signal 5 days before the earnings announcement. So you would have had an opportunity at least to look to get long knowing you were in an uptrend and not to sit on the sidelines. This was just about a month or so ago. And as we see here in ABX, here's an older chart. Same thing applies to this. You could have looked at this and said, well, I'm not really sure what to be doing with this stock. Once you apply the PET-D, you see you have a large series of red bars here. So the PET-D is basically screaming that this is in a downtrend. If you're thinking of doing anything, it should be more from the sell point of view as opposed to looking to buy unless we get 3 consecutive green bars. So we have a number of red bars here. So the PET-D is warning you that we're most likely going lower, and look what happened. The PET-D gave a downtrend signal, and the stock dropped 40% in 2 months. Okay, so it's a great early warning or a great indicator to tell you in advance what the probabilities of the trend are going to be. All right, so that's method number 1. You see how powerful that is just by itself in terms of a tool telling you what direction, most likely, whatever you're trading. It's a fantastic tool, all right? So, but all it does is its main purpose is just to identify trend, all right? Its main purpose is just to do, it's not a system, it's not a strategy, it's just a really fine-tuned trend identifier. So we need some structure. We need some structure now. Once we know the trend, we need some structure that has very high consistency, high probability for success, that will be in sync with the trend. How about a great strategy? And this brings us to method number 2, which is strategy number 4. Probably our most consistent strategy to date. It works virtually in any market, any time frame, in any direction. It's our most popular, and we have people that have just started trading for 2 weeks using strategy number 4. We also have hedge fund managers that have been trading over 30 years that use strategy number 4 in their hedge fund. So let's get more detail about what strategy number 4 is. But once again, I see some people may have joined us a little bit later. Remember, please hold off any questions. I won't answer questions till the end of the presentation. So we want to have this speed along, so we know some people are going to be busy. So let's go through all the slides before we ask any questions. All right, let's talk about some of the highlights of this particular trading method. It's for all traders, as I said, from beginners to advanced. We have people trading this that just started trading. We have fine-tuned experienced traders trading this. It was specifically designed for traders looking to catch quick momentum moves. That's the basic format of the strategy. In other words, it's designed to get in and out rather quickly. But we teach you ways in the course to stay in longer if you'd like. And I'm going to show you a couple of examples how you could apply that if you'd want. Now, it's intensity level, meaning how difficult is this to trade from 1 to 3. If 1 is the most intense of all strategies you've ever seen, where you have to be glued in front of your computer, and 3 is the most relaxed, where you can just enter orders and walk away, it's right in the middle. It's a very moderate strategy to trade, level 2. It only uses 1 indicator. That's how simple this strategy is. Most of our strategies actually at specialist trading only use 1 to 2 indicators. So it's extremely simple to learn. That's why we say we have beginners using this. It's extremely simple and easy to apply. Remember, it works any time frame, any direction, in any market. So I'm going to show you a lot of examples, but probably the most common question I get at the end of the presentations is, well, does strategy number 4 work on Forex markets? Does it work on intraday trading? Does it work on candlestick? It works on anything. I mean, I apply it to tons of different markets, all right? So it's a great, great consistent strategy. Now, we furnish all of our members with automatic buy and sell arrows telling you when a signal or a setup bar is in effect. But our goal, once again, is not to just simply have you, rely on when you see a red or a green arrow appear. We want you to learn and understand why a strategy signal is being generated, and you will learn that in the course. That's what we're all about. Now, I have those arrows on my charting platform. I don't even use them because I know from trading this for over 30 years how a strategy is being set up or not. Now, please remember, our edge here is consistency. When I say this strategy works, I mean that it can be applied to any market, any time frame, and it has a high level of consistency. But there will be small losses from time to time. I mean, it's only natural. It's almost like asking an athlete to hit a home run every time it goes up to bat or to make every shot. Even athletes, star athletes, don't do that. It's just perfectly normal for something to do great and then go into a small series of losses and then get back on track again. So that's the consistency we're looking for. We're not promising the world here. We're not saying you're going to make billions and billions of dollars with this, but we are telling you that you're most likely going to get very consistent results. 2 steps forward, 1 step back. And that's what it's all about. I know tons of traders on the trading floor who made hundreds of thousands, if not millions of dollars, and then lost it all. So we're not trying to promote any of that type of trading because that's basically just gambling. What we really want to promote is consistency. 2 steps forward, 1 step back. All right, and I'm going to share with you a couple of the rules in strategy number 4, just to show you that you can actually start using these and applying them to your own strategy. That's how consistent they are, and they will actually, in my opinion, increase your odds for success if you apply them to your trading method that you have right now. Can't give you all the rules because it wouldn't be fair to the people who have purchased the entire strategy, but I'll share with you a couple of them. The first one is the bar. All right, we want to see the setup bar. That's the bar prior to entry, close in the top quarter of its range. In other words, if you see if this can be a day bar, a weekly bar, or a 5-minute bar, the range is from top to bottom. Okay? Now, if this were a candlestick, well, it would just be the top of the candle and the bottom of the candle. It does not matter what type of bar you're trading with. But when you divide that bar by 4 equal parts, we want to see the close in the top 25%, okay? This is telling you, if you see a bar that closes in the top 25% of its range, it's an indication to buy, because the market is telling you, it's giving you a clue that most likely it's going to be going higher. What a great clue to get from the source, not from an outside source, not from somebody in a trading room, or not from some trading guru on TV, but from the actual thing you're trading. It's screaming to you, I'm most likely going to go higher. Why don't you jump on board? So if you see a bar close in the top 25% of its range, this should be your setup bar, the bar prior to entry. Conversely, if you see a bar close in the bottom 25% of its range, in other words, if you have a sell setup to go short, whatever market, whatever time frame, you want to make sure that you don't enter until you see a bar close in the bottom 25%. Why? Because it's the market telling you that it's most likely going to be going lower. So it's an indication to sell. Remember, we stated that the reason why the majority of traders fail, in our opinion, is because you're letting someone or something tell you what to do. Now, if you're going to do that, wouldn't you want to take your orders from the best source, which is the market itself? So this is what it's telling you. It's telling you it's most likely going to be going lower. Just jump on board and come with me. Okay, now, here is the other rules. Now, buy signals can only be entered above the 50-period moving average. This will increase your odds for success tremendously. You see, we want you to apply a 50-period moving average on every chart. And some people will say, well, Steve, I trade tick charts. That's okay. Plot a 50-period moving average of the last 50 tick charts you're looking at. Doesn't have to be a daily. We're not interested in looking at higher time frames to tell us what to do on the lower time frame. So don't worry about what the moving average is on a higher time frame. Just the chart. Keep things simple. If we're trading a tick chart, we want to see where price is in relation to the 50-period moving average on that tick chart. That's it. And if you get a buy signal, your entry must be above the 50-period moving average. You cannot enter to go long below the 50, because over time you will have no consistency in your trading. Most traders fail because they're buying below the 50 and selling above. We want to be buying above the 50 and selling below the 50. Therefore, buy signals can only be entered above the 50-period moving average, and if you're going short, your short entry can only be entered below the 50-period. If you add these two things together, these two rules which I gave you to your current strategy, even if it's based on something entirely different, we really feel you're going to increase your odds for success substantially. All right, so let's look at some strategy number 4 examples, sharing with you what I just taught you and revealed in the actual course. Let's look at stocks first, and we'll look at RAI. Now, this is a fairly recent chart going back starting in February. There's a 50-period moving average plotted, okay? First thing you want to do is ask yourselves, where is price in relation to that? Well, price is above. So what does that tell us? It tells us we are in no way going to be shorting RAI. We're not going to even consider shorting RAI. So we're looking for buy setups. Now we have two bars here that close in the top 25% of the range. You see they close in the top quarter. And I'm sure there are other bars here as well, but they did not meet the rules of the strategy. So as I stated, I can't give you all the rules. There are only about 3 more rules left, and I can't divulge all of those because it wouldn't be fair to people who spent a lot of money for this. But let me just share with you, these are the setups, and these actually generated 2 buy signals. So the first one was a nice buy signal. You would have held it. If you wanted to get in and out rather quickly, you could have, but you most likely would have continued to hold this. And if you wanted to double up, it's up to you. You could have gotten in again, and look what happened. Do you see the consistency when you're above the 50 period and you're looking for bars that close in the top quarter of their range? They're telling you that most likely they're going to go higher. And as the market went higher, look at all the bars that closed in the top quarter of their range. Look at all these bars. You see the market telling you it's going higher. How about ABC? Here's a not as recent, a little older chart going back to January, but we are above the 50, so this doesn't mean we're going to short anything. We're only going to be looking to go long. And we have a couple of scenarios here, 2 or 3, that fit all the requirements for the strategy. So the strategy generated 3 buy signals, and each one would have been a winner. We can also look to the downside. Here's First Solar FSLR. Where is price in relation to the 50-period moving average? Price is below. So the reason why most people would have lost trading this stock is because they were trying to pick a bottom. If price is below the 50, what's the rule? We're only going to look to go short below the 50. We'll only enter a sell signal, or I should say we'll only enter a buy signal if our buy is above the 50. Well, there's no way you could have gone long because all the prices are below the 50. So if we're looking to go short, we see here that we have 3 bars that matched all of our setups for the requirements of strategy number 4, and you would have had 3 sell signals in those couple of months. Here's an example in BBY. This is starting just about a month ago in the beginning of March. Now, as you see here, price is above the 50 period, and price closed below the 50, but then bounced back up. Now, this is a buy signal, and it closed right here in the top quarter, so you could have entered on that day or been more conservative and just entered the next day, but either way, this is a valid buy signal, and look what happened. The stock went right up after that. You see how once you apply these techniques that have stood the test of time that we teach you, this is just a fraction of what we teach you in our courses. You see how you start to get in sync with the market, and no longer are you feeling like, wow, everything I do is wrong. I buy at the top, I sell at the bottom. It's because you're out of sync with the market. Once you learn how to be in sync with the market, you start getting on that road to consistency. How about KORS? Okay, this is CORS. This is in February or so, a little month and a half ago. Now, this is a more advanced setup. We have a bar that closed, or a couple of bars that closed above the 50. Now, they did not meet the requirements for a strategy number 4 buy setup, but then the bars closed back below, and this actually did generate a sell signal. So you could have taken this, gone short CORS, and look what happened. And there was another sell signal generated just about a couple of weeks later. So if you had missed this one, or if you didn't like the risk, you could have taken this one. The stock basically went from 70 all the way down to 64 in a couple of weeks. Now here's a good example of how this can work in the face of news as well. Here's a UA. Now obviously the stock was well above the 50-period moving average, so we don't have the 50 moving average here for example purposes, but trust me when I say the price was above the 50 period, so this means we're only looking for buy setups, and lo and behold, we have a bar that closed in its top quarter of its range right here, and it meets all the requirements for a proper number 4 buy signal. So here was a buy signal generated, and you could have taken advantage of it and gone long that day or of the next day, but look what happened in the next week. You see how once you learn how to listen to the market, you're in sync as opposed to doing the opposite. Now, strategy number 4 had generated an 11-point gain in just 4 days. Obviously, some news came out a week later. We weren't privy to the news. All we did was just listen to the market. Here's another example in CMG. Now, here you see the 50-period moving average. Price is well above the 50. All right, we have a proper buy setup. A green arrow is generated telling you that this is a valid buy signal according to all the rules of strategy number 4. So, as we see here, the very next day nothing much happened, but look what happened after that. A news announcement came out, and the stock went up 75 points in just 2 days. Now, obviously, this is an expensive stock. It's a $600 stock. We're not saying that everyone could have purchased this, but we have a number of students who like to apply this for expensive stocks and then simply buy options. It's much cheaper to buy options, and you could have just simply bought a out-of-the-money call and applied it using the same rules. Once you had a valid setup, you could have just purchased the call, and you think you could have done well on a 75-point gain in just 2 days? Now, let's look at E-mini trading. All right, I know a bunch of you are probably saying, well, I don't trade stocks, Steve, or I don't trade daily bars. Well, let's look at the E-mini. Let's start out with a daily bar setup. This is going back to the beginning of the year. Now, right off the bat, someone could say, boy, this is tough. We're below, we're above, we're below. Sure, it is tough, and those are difficult markets to trade with the 50-period moving average rule, but we can still generate some signals. In fact, these are all setup bars that, as you see here, we closed in the top 25% of our range. Then the next one closed in the bottom 25% of its range, just below the 50 period. Then the next one closed in the top 25, just above the 50, and then this one closed well above. Okay? These were all valid signals to trade the E-mini on a daily basis. Each one was profitable. Now, we realize that some people day trade the E-mini, myself included. So here's a 5-minute chart, just going back to Monday. This was just a couple of days ago on Monday, and as we see here, we are well above the 50-period moving average coming in. You see this is on the 30th, 3/30th, March 30th, and price gapped up that day on a 5-minute time frame and continued to go higher and higher. So right off the bat, we know that even on the gap up, we're not going to short. Why? Because price is above the 50 period. We're only looking for buy setups. So we still look for that rule where we want to find bars that close in the top quarter. And strategy number 4 applied those rules and generated 4 buy signals in the first 2 or 3 hours of the day. Each one was profitable. Now, let's transfer over to the Forex markets, because I know we may have some currency pair traders here, because people said, okay, well, Steve, I saw an intraday chart of the E-mini, I saw weekly charts, I've seen stock charts, but I trade the Forex currency pairs. Okay, here's a daily chart of the euro dollar. This is an older chart, but I'm showing you for educational purposes for 2 reasons, because many times people will say, well, what happens when you're above and then you cross below? Well, here's a perfect example. We have buy signals that were generated when we were above the 50 period, and the minute we crossed below, strategy number 4 generated sell signals. Once again, it's easy when you're on the right side of the market and the 50 period moving average tells you the overall trend. Okay, it doesn't fine tune it like the pet D, but it tells you the overall trend of what side to be on. So if you get a buy signal, your entry, as you see right here, should be above the 50 period moving average. Doesn't matter what market you trade, doesn't matter what time frame. If you get a sell signal, your entry should be below the 50 period moving average, just as you see here. Now, I'm not going to sit here and tell you that every trade works. Remember, I stated at the beginning of this presentation that we're looking for consistency. 2 steps forward, 1 step back. From time to time, we will have some minor losses, such as this example right here. Now, this is an SNDK. The add-on automatically generated a buy setup for strategy number 4. So let's say we were trading this, and we say, oh boy, this is great. I got my first buy signal. I'm going to jump in and buy SNDK, and then look what happens. Your first trade turns out to be a loss. So at this time, you don't trust the method. You don't think it works. And so you say, well, I'm not going to trade this anymore. So you sit back and you watch it, but you don't really trade with it. And then another signal is generated about a couple of weeks later. And you don't take it because you're scared now, because you had a loss. And then this one works fantastically. You could have made back everything you lost and then some more. So we have to ask ourselves, is there a way we could filter out some of the bad setups? Because once again, not everything is going to work out. Sometimes we get into these choppy markets, and sometimes we get stopped out with a minor loss. So how can we fine-tune our entries and fine-tune so that we know which setups to take and which setups to not take? How can we increase our odds for success? And this is where we combine the PET D, method number 1, with strategy number 4. Once we discovered this, this is what we named our dynamic duo. And this is what probably our most successful trading package we have at Specialist Trading, because we have so many traders who use this now. Once again, we have hedge fund managers using this. We also have beginning traders using this. In fact, there's a trader in India, and I've never followed the Indian markets. I don't even know what Indian stocks look like or how they trade. But this person had been just dabbled with trading before, very inconsistent, had never done well, and purchased the Dynamic Duo last year. Since then, he has reported back to us that he's been able to get his trading consistently, and he's thinking about purchasing a house in India because he's become so consistent with his trading, just by applying the Dynamic Duo, strategy number 4 and the PET D. And we're not promising these results to everyone that you're going to be able to buy a house within a year, but we're trying to tell you that there is a high level of consistency in our Dynamic Duo. Let me show you what I mean here. When we apply this, this is the method we want to use. We're only going to trade strategy number 4 buy signals that are colored green, okay? And as you see here, if we apply this to the first trade here with SNDK, we have 2 buy signals, but without the PET D applied. Obviously, the first one did not work, but the second one did. Now, if we apply the PET D, we want both of those buy setups to be colored green. And if we apply it, we see that the first one was colored red. So therefore, it's telling us that this is not a high probability setup. Don't take it. So you would have bypassed that loss altogether. Now, the second trade was colored green. So you would have taken that one and had a nice winner. How about sells? Well, we're only going to trade strategy number 4 sell signals that are colored red. Okay, so as we see here in this older chart, or ROST, we have 4 valid strategy number 4 sell setups. Each one is a valid setup. Now the first 3 actually would have, maybe if you were trading quickly into this, you would have been whipsawed, or you would have been very discouraged because nothing much happened after you got into these first 3 trades. So the last one, we haven't seen what's happened yet. But remember, if we apply the PET D, we want to see all sell signal bars colored red. So once we apply it, well, guess what? The first 3 were colored green. So the PET D was telling you, once again, not an outside source, but the PET D was telling you, don't take these sell setups because the short-term trend is still up. And you don't want to sell when the short-term trend is going higher. All right? We only want to sell when the trend is going lower. So you would have completely bypassed the first 3 trades and taken the last one, which was colored red. So that was your confirmation that it was okay to take that, and look what happened. All right, so let's look at some more recent dynamic duo examples to show you how it works in all markets. Now, once again, we're not promising you that every trade is going to be fantastic, but what we are trying to say is that we've had tremendous consistency with strategy number 4, and we've had tremendous consistency with the PET D. But when we apply them together, we even ramp up our odds for success even more. So let me show you some of these examples here. Here's in WYN. Once again, we have 2 buy signals. This is in February coming into March. The first buy signal obviously didn't work out. It was a loser right off the bat. But the second one did. How could we have known in advance which one to take? By simply applying the PET D, we see that the first buy signal was red. So what our rule states, in order to buy, we have to have the bar colored green. So we wouldn't take that one. But the second one was confirmed, colored green, so you would have had only one winner out of these 2 trades, one being a loser and one being a winner. How about Tiffany? Okay, this is a perfect example of how the PET D will keep you out of trouble so many times. Now here is a valid buy signal in January for Tiffany. All right, it's a perfect pullback trade. The stock comes back to the 50-period moving average, and then a valid strategy number 4 signal is generated. But now that you have the dynamic duo, you say, well, before I take that, I'm going to just apply the color bar algorithm. All buy setups should be colored green. Once you apply it, you see that the PET D was coloring that buy setup red. Therefore, you didn't take the trade. Everyone in the world could have said, hey, you got to take Tiffany. The earnings are going to come out, or there's some great news, or the stock looks fantastic. I don't understand why you're not buying it. But you know more than that. You know better than them. And you just say, listen, I'm just listening to the market. I don't care what anyone or anything else says. And look what happened. Obviously, once again, some news came out. I believe it was bad earnings. It wasn't as if Tiffany and Company CEO called us up and said, tell all of your students to get out of Tiffany and to short it because we're having some bad earnings announcements. No one told us in advance. The only thing that told us in advance was the market itself. How about NFX? Okay, this is February coming into March. 2 buy signals generated by strategy number 4. Both ones were profitable, and they both should have been colored green. Once we apply the PET D, guess what? Lo and behold, they both were colored green. How about CRM? Well, this is coming into this month, April. We had 3 valid buy signals. Each one was profitable. In fact, we had one fantastic buy signal right before this great run-up here from roughly 63 all the way up to 70. Now, obviously, if you were waiting to get in the next day, you would have missed this trade. But if you were more aggressive, you could have entered on this day. But you would not have entered unless the bars were colored green. Once we apply the PET D, we see this one was green, this setup was green, and this one was green. How about Yahoo? Okay, 2 valid sell signals generated using strategy number 4. They need to be colored red, though, in order to have confirmation. Well, we see the first one was colored red, and the stock went from 50 down to 46 in just about 5 days. And then you had another sell signal, and it was colored red. So you could have taken that short, and the stock goes down 47 down to 42 in the next week or 2. So you see how you're ramping up your odds for success by applying both of these together. That's why we call them the dynamic duo. That's why it doesn't matter if you're trading for 2 weeks or 20 years. It's really going to help your trading. Adding the consistency of strategy number 4, because strategy number 4 is such a great method by itself. But you're just only ramping up your odds for success by applying the PET D. Here's a current chart in Grub going all the way up into the first week of April. 4 buy signals were generated using strategy number 4. Okay, so the strategy just in and of itself generated 4 buy signals. Once we had the pet D confirmed them, says, yeah, they're all okay to take because they're all in sync with the trend. And as you can see, each one of them was profitable. How about double A? Okay, as we see here, this is a little bit more advanced trade because we're oscillating below and above the 50-period moving average. But once again, if you have the add-on, it automatically generates buy and sell arrows telling you when a valid signal is generated. You can study and learn from these educational tools. But just coming into February and coming into March, 2 buy signals were generated. All right. Now the markets were a little choppy and a little volatile looking at this chart. So you're sitting there thinking, boy, should I take these trades? Because nothing much happened after the first one. And what about the second one? Well, all you have to do is apply the pet D. Remember, all buy signals need to be colored green. And both of these bars that were generating buy signals were colored red. So where everyone else was telling you, boy, you got to go long this market, the stock's going to take off. Nope. You said, no, I'm going to sit in the sidelines and wait. And look what happened. The stock went roughly from 16 all the way down to 12 in the next month or so. And Verizon. Here's a great example of how the pet D along with strategy number 4 will switch back and forth depending on what the market is doing in relation to the 50 period. There was a sell signal originally generated in January that worked out very nicely. The stock went down about 3 or 4 points. But then as we see here in February, we had a buy signal followed by a sell signal. Now, this is where it gets complicated. Like, which one do we take? Are we supposed to be long? Are we supposed to be short? Well, here's where the pet D helps. Remember, a sell signal needs to be colored red. A buy signal needs to be colored green. Once we apply the pet D, we see that this first sell signal was confirmed because it was colored red, and the stock went lower. Now, once we changed color, we got a buy signal. This was a valid buy signal because the pet D colored it green. But now the next day, you would have said, well, boy, do I exit and reverse? Now do I go short? No, because it was not colored red. It continued to be green. So you don't take the sell signal. You remain long, roughly around 57, and look what happened. Stock goes up around 7 points in the next couple of weeks. And then you can apply this to commodities. Here's the ETF on gold. Okay, now gold, this is going back to the beginning of the year up until the middle of March, just a few weeks ago. As we see here, we had 2 signals generated, a buy signal in January and then a sell signal just in the beginning of March. Are they valid to take? Each one turned into a winner, but how would we have known in advance? Well, the buy signal was colored green. It was okay to take that. And then the sell signal was colored red. So it was okay to take that. You can apply this to crude oil. Here's an older chart of crude oil back in October going all the way into the beginning of the year. Now, the only people who lost money trading crude oil were people trying to pick bottoms. Remember, if price is below the 50, what are we doing? We're only looking to go short. So there was no reason to try and buy crude oil all the way down here. Obviously, crude oil did bottom out at a certain point, but that's not of interest to us. We're only going in sync with the trend at the time. So the strategy automatically generated 4 sell signals, or I should say 3, I'm sorry. But how did we know to take them? We just simply apply the pet D, and each one was colored red. And you see how the pet D colored all the bars red all the way since October, when crude oil was much higher, telling you in advance that we're most likely going lower and lower. Would you have liked to take in those sell signals in crude oil well before it got into the national news where everyone was saying, boy, oil is just getting killed. I mean, how come we didn't see this coming? Well, the pet D and strategy number 4 saw these coming way back in September and October. How about weekly charts of the E-mini? Remember we showed you that chart of the E-mini? Well, these are all valid strategy number 4 buy signals. All right, but how do we know to take them? If you want to take them on a weekly basis, you simply add the pet D, and each one of these setup bars was colored green, giving you the confidence to either go along the E-mini on a weekly basis, or you could have just used it as a market trend identifier or a market pinpointing tool. How about the E-mini? Here's a 15, or I should say, this is a daily chart of the E-mini. This is just going back to February. Now, once again, we had 2 signals, a buy and a sell. Now, the strategy just by itself will automatically generate these setups because it just sees and meets the requirements of the strategy. So how do we know which one to take? Well, you apply the pet D, and you see that both bars were green. In order to take the sell signal, it would have had to have been red. So you just take the first signal, which was green, and hold on to it And look what happened. This is on a daily chart of the E-mini in the beginning of February. Now I know you say, well, Steve, I don't trade daily charts. I trade intraday E-mini. Here's a 5-minute chart of the E-mini a month or so ago, and you can see here are all the sell signals that were generated, or sell and buy signals too. But the first one was generated here in the first half hour of the day, had a nice sell-off. Now you had a buy signal generated here. Nothing much happened. You could have gotten in and out very quickly, made maybe a point or so. This is where we say, not every trade works out properly. You may have gotten stopped out at this if you're looking for a big run-up, and may have gotten stopped out with a small loss. But that's okay, because once you got stopped out, you could have gotten back into the market, taken this trade to go short, had a nice gain to the downside, and another one to go short with another nice gain. So this is what we're talking about when we say 2 steps forward, 1 step back. From time to time, you will have these small, minor losses. That's okay. The strategy, along with the PET D, is so resilient that you'll be able to get back on board and most likely make your losses back. Now here's a 10-minute chart of the E-mini. This is on the 25th. This was last week, okay? This is last week on a 10-minute chart. Where is price in relation to the 50-period moving average? Price is below. So trust me, just this one rule, if you're not going to take anything away from today's presentation, just apply that one technique of trading in sync with the 50-period moving average. Because if price is above, well, then we'll look to go long the E-mini on a 10-minute time frame. But if price is below the way it is right here, the entire day you should never have looked to buy the E-mini if you're trading a 10-minute chart. And you would have saved yourself a lot of grief, a lot of heartache, and a lot of money by being in sync with the 50-period moving average. The good news is you don't have to worry about it once you have the strategy number 4 add-on, because it automatically generates buy and sell signals for you. So it generated 3 sell signals here. Now, if you're still wondering what the PET D did, well, all you do is apply the PET D, and you see here that each and every one of these was colored red, giving you the assurance to go short the E-mini. Now here's a daily chart of the Canadian dollar, okay, looking at currency pairs. We're above the 50-period moving average. It generated roughly 6 buy setups all the entire way up, and if we apply the PET D, each and every one of them was colored green. So you see how we just showed you intraday bars of the E-mini, we showed you daily bars of the stock market. We're also showing you daily bars of currency pairs, how well this dynamic duo works. In fact, I'm also going to show you a weekly bar of the currency pairs. I know there may not be a lot of people that trade weekly currencies, but even if you don't trade that market at all, I'm just showing you how this transfers over onto any market in any time frame. Now here's a weekly chart of the euro going back to last year, going back to June and July. Okay? Now the price was kind of selling off a bit on a weekly basis, but was oscillating above and below the 50-period moving average. At this point in July, the strategy generated a sell signal. Now you may have been a little bit reticent to take that, thinking like, well, maybe it's just a pullback. Excuse me. Maybe we're just pulling back on a weekly time frame and are going to make higher moves. Maybe the person in the chat room or that Forex trading room you belong to is saying you got to go long the euro dollar. It's a great buy right here. It's going to bounce off its moving average and bounce up. Well, you're getting a sell signal, but you're not sure it's going to be a valid one. So all you have to do is apply the PET D, and guess what? These bars have been red for the past 2 months. So it's telling you that we're in a full-fledged downtrend, and we're getting a sell signal. So I can't think of a better reason to take this trade. So forget about what everyone else is saying. Forget about all the systems or all the support and resistance. Forget about all the Fibonacci or Elliott waves. Just listen to the market. The market is telling you we're going lower, and you have some structure telling you how to get in. And look what happened. This is all the way up until March of this year. All right, so let's recap before we go into question and answers. We shared with you method number 1, the PET D. It's a color bar algorithm I was introduced to some 30 years ago on the floor of the Pacific Stock Exchange. What we have done is, with high-speed computers and with programmers, we've programmed it to be a color bar algorithm so that we don't have to figure out this calculation by hand. It simply colors the bars for us. If we get a series of green bars, we are in an uptrend. If we get a series of red bars, we're in a short-term downtrend. Okay? So it's a great technique for fine-tuning the short-term trend. You can apply this to any strategy you have. You can just use this for long-term. Remember I showed you the 20-year chart of the S&P index. See how well it could work just holding on to your IRA, when to be in the market, when to be out, when to be in cash. So it's a great tool. Then we also introduced method number 2 to you, strategy number 4, our most consistent trading method at Specialist Trading. Why? Because it works in any market, in any time frame, and in any direction. I just showed you tons of examples of how well it is consistent in those different time frames and markets. Now, from time to time, you will experience small losses. So how can we increase our odds for success? By putting these two together and creating what we call our dynamic duo, our most popular and our most successful trading plan at Specialist Trading. It's combining the pet D with strategy number 4. So when strategy number 4, a great strategy by itself, but when strategy number 4 generates a buy signal, when you apply the pet D, you want to see that buy signal colored green, the bar colored green. If it's a 5-minute bar or a weekly bar, it doesn't matter, because now you're getting the confirmation that you're in sync with the short-term trend. If you get a sell signal with strategy number 4, which is a high probability signal anyway, well, you want to increase your odds for success, just apply the pet D, and that sell signal bar should be colored red. Remember, you can apply this to any strategy you have, any technique, but we see how successful it works together with strategy number 4 and the pet D. That's why we call it our dynamic duo. Now, in closing here, I want you to ask yourself, and ask yourself honestly, do you think that these edges could have helped your trading this past year? Even if we're just talking about a bar closing in the top or 25% of its range, okay? You saw that, how once a market started going up, you saw all these bars that closed at the top of their range. That's the market telling you that most likely it's going higher. How about the overall trend? Now, the pet D tells you the short-term trend, but the overall trend is told to you by the 50-period moving average. You see how well that worked, where we're just showing you these different strategy setups where if price is above the 50, you only want to look to go long, regardless of what strategy you're using. If price is below, you only want to look to go short. So do you think anyone could have helped your trading this past year? What about the dynamic duo? Looking back from where you started in 2015, do you think it could have helped your trading? Well, here's what our offer is today. We're going to have a dynamic duo special. Okay, we're offering this for all of our attendees today with a great discount. You're going to get instant course access, detailed instruction, 5 videos, entries, exits, and stops. We're teaching you all the rules to the actual strategies. We're also giving you signal alerts, telling you on a daily basis, on daily time frame, when those signals have been generated. You get weekly video trading lessons to increase your odds for learning and to learn more different techniques. Remember, this includes both add-ons, the add-on to change the colors of your bars to red or green. It also includes the up and down signals for setup bars for strategy number 4. And you get access to my personal email where you can contact me whenever you want for life, because now you're a member of Specialist Trading. In fact, let me show you some of these options that you will receive. Here's an email alert. Once you become a member of the Dynamic Duo course, you're going to get alerts, signal alerts. Here's one that was generated on the night of the 26th. This was just last week for stock traders. Now here are our setups, and as you can see, we have different strategies, strategy number 1, strategy number 3, strategy number 4. Let's concentrate on HRS, okay? This was telling you on the 26th, if you wanted to, if you were an aggressive trader, you could have entered on that day, and you most likely would have seen the strategy generating. But if you're a more conservative, more standard trader, you would have entered on the next day, which would be the 27th. All right, so as we see here, HRS was actually below the 50-period moving average this entire time. Price was below. We had a couple of bounces above, but then we had this one bar, okay? And guess where it closed? It closed above. It met all of the requirements for strategy number 4. As you see here, this is actually a typo. This should be 326.15, not 226. So this was just, as I said, last week. So all of our members were privy to the information, knowing that this was a valid buy setup. But once again, you know, this is an expensive stock. Maybe you say, well, I'm not sure if I want to take the risk to trade a $70 stock. You know, how do I know if this is going to work out? Right? After all, we've jumped up above the 50 sometimes before, and then we went right back below. Well, we just apply the pet D. And as what we see here, all the bars were red coming into the setup. Guess what? The bar is also green. So not only did strategy number 4 see that this was a buy setup, according to its rules, which are completely separate from the pet D, the pet D algorithm also generated a green bar, telling you that we are now in the beginning of a short-term uptrend. So this was last week. You could have entered the trade roughly around 73.50, and look what happened in the next 3 days. The 6-point gain in just 3 days trading this. All right. This was an actual signal generated by strategy number 4 and confirmed by the PET D, and you would have been privy to the setup in the email alerts if you were a stock trader. Now let me show you something that happened today. This happened this morning, because I know a lot of traders and a lot of webinars you go to show you things that happened maybe 5 years ago and they're trying to convince you to buy their product. Well, I wouldn't believe that either if someone was showing me things that happened years ago. So I want to show you just how consistent this is and how well this works, not only going back a few months, but happening as soon as recent as today. This is in the E-mini on a 5-minute time frame. All right, we're looking at the 1st of April, which was yesterday, and this was the close on a 5-minute time frame. We're kind of oscillating above, below, above, below. But since the last 10 minutes of yesterday's day, we had 3 consistent green bars telling us we're most likely in an uptrend. But that's okay. We're not going to trade anything in the last 10 minutes of the day, so we wait for the opening of today. Here is the first 5-minute bar. The strategy number 4, which is completely separate from the PET D, generated a buy signal. Okay? But at the same time, the bars remained green. So this was your confirmation to go ahead and go long on the very first 5-minute bar of the day. So if you're an intraday trader, wouldn't you have liked to have known to have the confidence to go long 5 minutes into the opening? So you could have gone long roughly about 20.54, and strategy number 4, along with the PET D, generated a 10-point gain in just 30 minutes. That's $500 per contract. So if you had one or even multiple contracts, that could have been a nice way to start your morning today. This was this morning, just roughly about 4 hours ago. So showing you how these techniques work. That's why, as I stated, this is our most popular as well as consistent trading plan we have. This is our PET D and strategy number 4 dynamic duo. Works in any time frame, any market, in any direction. So we're going to have a dynamic duo special for you today, once again including all the things you're going to receive here, the instant core access, all of the entries, exit, stop rules, everything, my personal email, and we're throwing it in basically as a 2-for-1 attendee special. So all you have to do is pay for the PET D, and we're going to throw in strategy number 4 for free. So you're just purchasing our PET D program. That's it. And we're going to give you strategy number 4, which is a great method by itself. Now I'll show you how valuable this is. Pro Trader Strategies is our sister site. They market and promote and sell and do discounts on all of my packages, all of my courses, all of my studies. I just do the teaching aspects. They do all of the marketing and sales. Now, on their website, they have these methods advertised for close to $3,200. But we're only giving you the price and making you have to pay the price of the PET D, which is $24.95. So that's all you have to come up with, and you're going to get strategy number 4 for free. It's being included in that 2-for-1 deal. Now, the best thing about this is that Pro Trader Strategies is accepting payment plans. So if you call them up for a limited time, they will accept a small deposit so that you can be up and running in moments applying these 2 techniques. So you don't have to come up with the $24.95 right away if you don't want to. You can simply set up a payment plan with them, give them a small deposit, and you will have immediate access to both my strategy number 4 and the PET D combo. So how do you access this? Here's the information. Once again, Pro Trader Strategies handles all of the marketing and all of the sales. You can email them, any one of their trading consultants, at trading@protraderstrategies.com. You can call them directly to put together some type of trading plan at 310-598-6677. Or if you see here the link below, that's the link that you can just copy and paste onto your browser, and it will automatically take you to the sign-up page. So if you want to take advantage of that deep discount of $24.95, you can simply copy and paste that, and you will automatically take to the sign-up page. Now, once again, that has to be copied and pasted, but if you look on your chat box there, on your GoToWebinar column on the right, you'll see that they have posted in the chat box a live link. So you can automatically click that on, and it will take you there. Okay? So I'm going to leave all this information up while I take any questions, because I know there probably were some questions. We have a good 10 or 15 minutes left, and I'll go through and open up the question and answer box right now. Once again, if you're interested, take advantage of this very soon, because this is a limited time offer for this 2-for-1 special. Remember, we're just having you purchase the PET D, and we're throwing in strategy number 4 for free. And we're also, for a limited time, having payment plans. So let me open up the question and answer box just to see, and I want to thank you also for waiting. First question, is this the normal? I hear, is this the normal time for the seminar? Well, many times we change because of other seminars we're doing, but be sure to look at your email announcements, because sometimes our webinars will be in the afternoon, sometimes they'll be in the morning, okay? Matt is asking, don't you see the same with candlesticks? I assume you're asking about the PET-D. Not really, Matt. The candlesticks do not show you in advance many times. In fact, we have other strategies that just trade off of candlesticks, and they will at times produce a buy signal, and the candle will be colored red with the PET-D. So we can't rely just on candles to tell us and give us the confirmation the way the PET-D does. The PET-D works better than any other tool I've seen. Once again, I've been using this for 30 years. I use it on a daily basis. I used it this morning before the presentation. So, as I said, I've been trading for 38 years now. I was introduced to this some 30 years ago, and I haven't stopped using it. So if it's worked for me, if it's gotten me to that level of consistency to be able to trade for nearly 40, I'm sure it can help you as well. Okay. Paul asks, does it work on all time frames? Yes, Paul. I just showed tick charts. I showed daily bars. I showed weekly bars, 5-minute bars, all time frames, and all markets. Gary is asking, what besides the 50-period moving average and top 25% of bars triggers to the buy signal? Do you need to enter after a pullback? Well, Gary, yes, there are many other, not many, but at least 3 or 4 more rules to the strategy. But once again, it wouldn't be fair to people who have spent the money and then I just give away the rules for free. I mean, that's what we do in our courses. We teach you in good faith what I've accumulated in my 38 years. We gave you 2 of those rules, which you can apply to virtually any strategy you have right now, and I really feel in my experience of trading that will increase your odds for success. But ultimately, it's up to you, and you have to take in good faith that we're offering you a product here that, although it does cost some, we're trying to give you payment plans and giving you great discounts and 2-for-1 offers so that you can become a member. But we just can't give everything away for free. It would be similar to going into a restaurant and asking for some free appetizers and then asking for the entire meal for free. I mean, the restaurant couldn't survive that way. Paul, good question. Does this work on TradeStation? Yes, it does. In fact, if you want, I'm going to mention which actual platforms it does work on. It works on TradeStation. It also works on NinjaTrader. Both, when I say works, I'm talking about PET-D and strategy number 4 add-ons. You can also apply it to a Metastock and MT4. Now, a lot of people ask about Thinkorswim. You can use it on Thinkorswim real data to run the PET-D and strategies using free NinjaTrader charts. So we load it up and we set it up for you. So in other words, because of the way Thinkorswim is set up, you cannot just simply upload all the add-ons onto them. They haven't given us the access to do that. But what you can do, using their data, they will provide you with a free NinjaTrader platform, and so you can just go to NinjaTrader and use that when you apply the PET-D and Strategy 4. So it's very simple and easy, and it's all free. It all comes with that. Okay. Let's see. Do we use trailing stops? Well, in the PET-D course, we actually show you many ways to apply the PET-D as a stop trailer. So there's lots of different ways, and in our advanced courses, yes, we do. So this comes with roughly 4 separate individual stop placements. We show you the basic format, we show you a little bit more advanced, and then we show you trailing stop techniques. Remember, ultimately, as I stated in the opening sentence, we want to put the power back in your hands. We don't want to make the decisions for you. So therefore, we give you the ingredients, and it's up to you to decide what you want to use. So many of our traders just use our standard basic format stop, and that's it. Other traders use our more advanced stops, or other traders just use a technique which moves your stop to unchanged, and then you just trail it. It's up to you. There's no right or wrong answer. The only wrong answer is when you're listening to someone tell you where to place your stop. You should make your own decision on your own risk parameters where you want to place your stop. So this is what we teach you. We give you the information and the tools, then you decide. So yes, we have stops, but we teach you different ones. We have trailing stops and standard set stops. Moses asks, are there additional filter on the buy and sell signals when the closing at the top are low, 25%? Well, yes, there's a total, I believe, of 5 or 6 rules to strategy number 4. These are all pattern recognition that we're looking for, and also exit and stop placement, but those all go into making of the actual signal generation, okay? Any win-loss ratio for however many months? Well, Mark, remember, once again, we want you to decide how to trade the strategy or the PET-D. Since we give you all the tools, such as I stated with the stop loss, there's maybe, I believe, 4 to 7 different stop loss placements that we give you. That means each and every person can trade it differently. So in order to get win-loss ratio, in order to get percentages, the only way you can do that is if everyone trades the same way each and every time, and that goes against our philosophy. We want you to become a part of the process. Therefore, we don't believe in those things because 2 traders can take the same setup and come up with entirely different results. We're not a systematic company. We're an educational company. This means we're not going to sit there and monitor and give every win-loss ratio for every variable there is. It's just too difficult, and it wouldn't be proving anything. I've been using these, as well as you can see the testimonials on our websites, how people have done and using the dynamic duo. Do a Google search on us and some of our reviews, what people have said about the dynamic duo, as well as how well it works, our trading techniques, and it will give you the confidence, I believe, much more so than a simple win-loss ratio. Let's see. Let me go some more questions here. Moses says, I think I missed it, but did you say you do not use the PET-D with candlesticks? No, Moses, I use the PET-D with candlesticks all the time. I used it this morning. The PET-D can be applied with candlesticks. All I stated was that I think someone was saying that why would I need the PET-D, because don't candlesticks offer me the same information? And my answer was no, they don't, not at all. Many times, if I just trade a strategy based off the candlesticks, it will generate a certain signal. Now, once I apply the PET-D to the candlesticks, which the PET-D does work with candlesticks, we show you how to set that up, it doesn't confirm it, so I won't take it as well, okay? Once again, TB is asking, how often does the strategy work? Is it 100% accurate? Well, first of all, let me just say this, TB. No strategy is 100% accurate. If any educator, regardless if it's someone else you see, some other webinar, if they say something is 100% accurate, I would run. Because, as I stated, nothing in life is 100% accurate. You have things that what you're looking for is not home runs. You're looking for 2 steps forward, 1 step back. All right, that's consistency we're looking for. I knew of tons of traders who made tons of money in a short time and then lost it all. So that's what you get when you're trying to hit home runs. That phrase comes to mind, the brighter the sunshine, the darker the shadow. If you're looking for home runs, you can just as easily have these humongous losses by striking out. We're not looking for that. We don't want our P&L to be like a roller coaster, going straight up and straight down. We want this nice upward trend in our P&L, and that's what we're looking for, and that's what these methods, in my opinion, produce, consistency. Now, in order to answer your question, are they 100% accurate? Once again, that goes back to the other gentleman's question. That would be systematic research. We don't believe in that. We don't. There's a reason why we are required by law to show you our disclaimer, because most systems do not work over time, and therefore you have to tell people that we cannot guarantee that this will work. We don't teach or trade systems. We only teach strategies which make you a part of the process. Okay. Martina asks, when you personally trade, are you only looking at one time frame? Great question. Yes, that's all I look at. Remember, I know we've been taught that the proper way to trade is to look at a higher time frame to tell you what to do at the lower time frame. All right? I have, in my 38 years, found no consistency in trading that way. All right? My mentors taught me this. They said, Steve, there's amazing how many things there are that aren't. In other words, we've been taught these things through conventional wisdom that are supposed to work, but I have personally found no consistency in that. Now, having said that, if you feel you must trade that way, that's fine. You're not in any way going to alter the strategy tremendously so that it totally doesn't work. But To me, I only teach my students just to focus on the one chart you're looking at. If you're looking at a tick chart, then that's the only thing you should be looking at. That's the only setup. That's the only 50-period moving average you're concerned about. Don't worry what the 50-period or what the daily bars are doing. Who cares? I mean, we're not trading that. We're trading a 5-minute bar or the tick bar chart. Conversely, if you're trading a daily chart, who cares what the weekly is doing? All right. Mostly what I found out is using that technique kept me out of a lot of trades. I would have a great setup, but it wasn't in sync with the high time frame. So I said, well, I've been taught they have to be in sync, so I guess I can't take the trade. And it would turn out to be a great winner. So I said, you know, this is silly. Why don't I just trade what I'm looking at? So personally, that's the way I trade. Now, once again, would I tell people not to trade that way? No. If you're asking me personally, I have found in 38 years no consistency to that conventional wisdom. For some reason, we've been taught that. In my opinion, there's really no consistency in that. It'll work sometimes, other times it doesn't work. So why use it? Okay. Moses asks, can you use the pet D with strategy 1? Sure, you can use it with any strategy, any one of mine, any one of yours, anything. You can use it with the news. Many times a news announcement will come out and people go, boy, that's great news. That's great news. You got to buy it. I say, well, if that's your strategy on this bar, what's the pet D doing? He says, well, the pet D's red right now. I said, well, then I wouldn't buy it. And most often it will be in sync with the pet D. Most often the news will not pan out and whatever they're trading will go lower. So you can apply it to anything, whether it's strategy number 1, one of your strategies, the news, even if it's based off the full moon. It really doesn't matter. Mark asks, do we get the signals forever or have to pay an extra for them after the first year? That's a good question, Mark. And once again, that's all handled through the Pro Trader Strategies people. So I would ask them. I would email them. They can answer that for you. My first feeling is when you say signals, are you talking about the automatic up and down arrows? See, I'm not sure if you're talking about that. If you're talking about the emails, I believe the emails are for 1 year. But trust me, after 1 year, you're going to be able to know how to spot these like the back of your hand. You won't need anyone to tell you when a signal is generated. You'll know right off the bat. But if you're talking about the add-ons, the up and down arrows, or the signal generators, or if you're talking about the pet D, no, those are yours for life. Okay? Matt says, when using the pet D, doesn't that make us not self-sufficient? We are relying on an algorithm. Very good question, Matt, because as I stated in the beginning of the presentation, I said the reason why most traders fail is because they're looking at something or trusting something that is outside of their source. In other words, they're outsourcing their information. This is true in a small sense. In other words, when we're talking about the pet D, because the pet D takes its information directly from the market. It's not a lagging tool. It doesn't lag. It takes it directly from what the market is doing on that bar. Okay? It's not looking back a tremendous amount of other information and that comes up with some type of a lag. What it is really as close to as I've seen of any other indicator or tool telling us what the market is doing right now. So oftentimes in choppy markets, you will see the pet D be red, be green, be red, be green, and a lot of people will say, well, how does that help me? Well, actually, it helps you tremendously because it's telling you what is happening right now. We are in a chop mode, and don't do anything. So, yes, in a sense, it is taking our information from an outside source, but most people, what we're talking about is we're talking about opinions, we're talking about fundamental news, we're talking about things that are very subjective. Things that someone has, their own thought process involved. Some trading guru, someone in the trading room, someone in the chat room, some system that works great on paper, but the minute it works in real time doesn't work. These are all things that don't, take their information from the most important source, which we believe is the market. Okay, so in a sense, in a small sense, it's a great question. Yes, it is an outside source, but it's not in any way ego-based or discretionary-based. It's just taking all of its information from the market, and that's the only thing we should be getting its information from. I know a lot of people will say, well, don't indicators take their information from the market? Yes, but most indicators lag. As you see here, the pet D will stay a color at the close of the bar, and that's it. It will not go back and redefine and recolor and repaint the bar. That's it. Now it comes up with its calculations for the next bar. So it takes each individual bar for its calculation. Okay? Question from Martine. If we've already purchased the Pet D along with another strategy, what is the price for strategy number 4? The price, as you see there, would be $6.95, Martine. If you've already contacted people at Pro Trader Strategies, because it may be different for each strategy, but if you already purchased something, you're not going to have to pay the full price. Do not worry about that, okay? Let's see. Where will this be recording of the webinar? Well, we record this webinar at Pro Trader Strategies. You can contact them, and they will send you a link, so you can contact it all. Just time for a few more questions. Does it work with Thinkorswim? Yes, we went over that. It works great with those, and they will show you a way in which to apply it with NinjaTrader, so you can use their data. Let me fast forward and see if there's any more. Let's see, where is this being recorded? Once again, when you're personally trading, do you look at only one time frame? Yes, I answered that before. I guess we've just about answered all of them. In closing, I just want to remind all of you that this is probably our most popular trading method, the Pet D. And you can do a Google search and look at some of the testimonials from people who have traded this, and you'll see how successful they are and how well they've done. If you're happy with what you're trading right now, if you're getting the type of results you want, well, then I would say most likely stick with what you're doing. But I think the reason why most people come to presentations is to learn something and to get a little information out and to hopefully be presented with something that has stood the test of time and that works very well. Now, even if we don't have you become a member of Specialist Trading, we always like to leave our members with something they can use. So I gave you 2 of those great techniques, making sure a bar either closes in the top 25% or the bottom 25%, and then making sure you enter either above or below the 50 period. Those 2 techniques alone, in my opinion, will increase your odds for consistency tremendously. So you see, in good faith, we're not just trying to sell you something, we're trying to educate you and give you something for free, regardless if you decide to become a member of Specialist Trading. Okay? So, in closing here, here's the information once again you need. Pro Trader Strategies is our sister site. They market and promote everything for us. So if you're really interested in changing your trading, turning it around, and really becoming consistent, contact them. You can get this special deal where you're just basically paying for the Pet D, and we're going to throw in strategy number 4 for free. Okay? Now, if you really want to turn your trading around, trust me, this is really going to get you on consistent level. Plus, you're going to be having a 38-year trading veteran mentor you throughout the process. So you can contact me whenever you'd like with any questions or anything that has, maybe caused confusion, or you're not really sure how to implement the strategy. Okay? And as well, we have payment plans. So if $24.95 is too much to come out in one lump sum, trust me, they will work with you. All you have to do is put down a small deposit, and you will be up and running in just a matter of moments. So, in closing, I hope you got something out of this presentation. I really look forward to you becoming members. And one last thing before we conclude here. Also, if you're interested in seeing me live and teach courses in Las Vegas, here is the information once again. This is May 11th and 12th. You're going to see 7 great speakers: stocks, options, futures, forex, and even taxes. It's going to be at the MGM Grand in Las Vegas. So trust me, the trade in the E-mini alone, had you taken that with the Pet D, could have paid for everything your whole entire weekend. So there's a lot of great ways to learn and to come see more information. So that's going to be in May, and there's the link at the very bottom once again. In closing, I want to thank you all so much for attending. Thank you so much, and I look forward to all of you becoming members of mine at Specialist Trading. Thank you so much. We'll see you next time. Bye-bye.